Hello everybody, this video is a trading model that works for beginners. So what I'm about to show you is the simplest form of trading that potentially exists. And this is simply based on price and trend. So in this example, I'm using gold, and this is the most recent data we have. So I'm on gold futures. Now the time frame is not important at this time. Okay, so I'm using it at 20 hours, but this can be used for pretty much any time frame. So what are the things we actually need? So first, of course, we need to understand what price is currently doing. So in other words, what is the trend? This is very important because we want to trade with the trend. Right now, if I use just my eyes, I can see price is going from the top left towards the bottom right. So that tells me price is in a downtrend. You would typically want to do this on a higher time frame. So the daily, the weekly, the monthly, etc. At the moment, I'm doing this on the 20-hour time frame. So now we have the trend. So that's the first part. Now, the next thing we need to do is we just need to understand that when price is in a downtrend, it will at some point perform a retracement. Okay. Now I talk a lot about my two-step model. If you look on my channel, you hear me talk about the two-step model. I use this model for ES and Q, YM, but I can apply this model to any security. In this example, I'm going to take the same concept of the two-step model. I didn't invent the name, and I'm just going to apply it to gold. So the reason it's called two steps is because we are looking for two things to happen. The first thing is just a trend, which I call the direction. So that you now know price is going in a certain direction, right? It's going one way, down. So we have that information. We do nothing because we need to wait for the second part, which is the second part of your two step. The next step is the retracement. Right here, you can see we formed this low 22nd of March, and we retraced all the way to this high, which is the 24th of March. That's a retracement. That retracement is going to go into, for example, a fib or a fair value gap, or it can be based on a fixed range profile level. It doesn't really matter. You can decide what confluences you want to choose. I use for ES, for example, I use a fair value gap and a fib. And when I say a fib, I mean any level on the fib. Now, to measure that, you just need a swing high and a swing low. Right here, we have a swing high. Why is this a swing high? Because we have a lower high to the left and a lower high to the right. That makes this a swing high. What do we have here? It's a swing low because we have a higher low to the left and we have a higher low to the right. So that makes this move here, these three candles, our direction. So we can now run a simple fib, okay? Run a simple fib. I'm just going to use the swing grades. If you don't know what that is, don't worry about it. Now, we waited for the price to retrace. Remember I said you can use fair value gaps, you could use a combination of things. I like to look for fair value gaps, but it could be order blocks, it could be anything. Now, right here, we have a fair value gap. It's hard to see, but there is a fair value gap here. Okay, just right here, it's a fair value gap. So my eyes are drawn to this fair value gap. We do go into it, right? But also we have a fib from this high to this low. So nothing complicated so far. All we've done is identify the direction and we just wait for the retracement. We just wait. Retracement has gone into this level here, the 75 fib level. Okay, 79, 75, that area. It doesn't have to be perfect, it just needs to go there. Now here's the edge. If the direction is going down and we have the retracement, we now expect price to continue the original direction. This is the two-step model. That's it. Now the edge is this. At this point of retracement, there are a couple of things you can look for that can give you confidence to know that price is going to reverse. I will discuss that in a separate video. But the one thing I like to look for, so just one additional confluence, it's not the main thing, is SMT. When price reverses, well, retraces into that fair value gap, right? I am looking for SMT. Between this high and this high, we have an SMT with silver. This is gold, so we have an SMT with silver. Silver makes a higher high, and gold makes a lower high. That's the first edge. Now, like I said, there are other things I'm looking for when price gets to this point. When price closes at this point, I am watching for something very specific to happen for me to then enter my trade from here. That's it. Now, if price had gone beyond this level, up and closed above it, then potentially that trend has ended. Or it could be a far bigger two-step, but I always see that as a trend ending. That is the two-step in a nutshell, because I tend to do a measured move. So 100% of the directional move. That means this move from this high to this low. If I take the fib and I simply project it down from this level, then my expectation is that price would at least come down to this level. Could go lower, or it could come down to that level. One thing I do look out for is SMT. It's not always there, but when it's there, it's really good. So SMT is just one of those things that give you an edge. Now this is live, and we've not executed yet. We've not delivered yet on this two-step, but I will maybe provide an updated video for you. So if you like this idea, you like the logic of it, you like the model, stay tuned, subscribe, watch the channel, like, of course, share with your friends. Because the more you do that, the more I get motivation to do more videos. Take this as point A, the origin. You take this low as point B, right? You swing low. And then here's your point C. This is where you start looking for trades. This is where you start hunting for trade, especially if you have SMT. All right, guys, let me know if you enjoy this. Please, through comments, likes, sharing, engagement, because that really motivates me, guys, to create more videos. I'll see you in the next video.